In 2025, over $5 billion of private equity and venture capital flowed into African companies, from fintech startups in Lagos to renewable energy projects in Kenya. But most of that money came from institutional investors, pension funds, endowments, and development finance institutions. In this video, we break down how African PE/VC works, the top funds, and whether individual investors can get a piece of the action. I'm your AI host, and welcome back to African Market Insider. Private equity, buying mature companies, and venture capital, investing in startups, are powerful engines of growth. Africa's fragmented markets, young population, and digital leapfrogging create unique opportunities. We'll cover 1. The difference between PE and VC in the African context. 2. Top PE/VC funds operating on the continent. 3. Sectors attracting the most capital. 4. How to invest, for both accredited and non-accredited investors. Volume. According to the African Private Equity and Venture Capital Association, AVCA, deals reached $5 to $8 billion annually in recent years. The top destinations: South Africa, Nigeria, Kenya, Egypt, Morocco. Key players: large global funds, Actis, Energy, Real Estate, Helios Investment Partners, Tech, Financial Services, the Rise Fund, Impact Investing. Regional specialists: AfricInvest, Tunisia, Pan-African, LeapFrog Investments, Financial Inclusion, Healthcare, Novastar, Agtech, Energy, Telecom Capital, Tech Startups. Development Finance Institutions, DFIs, IFC, AFDB, PropArco, CDC Group, now BII, they often anchor funds. Exit strategies: IPOs on African or international exchanges, trade sales to multinationals, or secondary sales to other funds. Fintech, still number 1. Payments, lending, insurance. Companies like Flutterwave, Chipper Cash, M-Kopa. Energy and climate, off-grid solar, renewable IPPs, clean cooking. Funds like SunFunder, now cross-boundary energy access. Healthcare, clinics, diagnostics, telemedicine, pharmaceutical distribution. Funds like AfricInvest's Health Fund, IFC's Africa Health Fund. Agtech and logistics, supply chain digitization, cold storage, last-mile delivery. Funds like Novastar's Africa Food Security Fund. EdTech and HR Tech, online learning, workforce development. For accredited investors, typically $100,000 plus net worth, high income, fund of funds, some platforms offer access to African PE funds, e.g., Impact Assets, Toniac. Minimums can be $25,000 to $100,000. Direct fund investment: you can invest in a specific PE/VC fund if you qualify. Minimums are often $1 million or more. Listed PE vehicles: a few African PE firms have listed holding companies, e.g., Actis raised a listed fund in London years ago, now rare. On the JSE, there are investment trusts like African Phoenix. For non-accredited, retail, investors, listed companies with private equity arms, some large African conglomerates have PE subsidiaries, e.g., Nedbank's private equity unit but not tradable. Crowdfunding platforms, emerging but high risk. Platforms like Crowdcube and Seedrs have featured African startups occasionally. Public equities: by investing in publicly traded companies that are themselves backed by PE, e.g., some JSE stocks were formerly PE owned. This is indirect. Risks: illiquidity: PE funds lock up capital for 5 to 10 years. High minimums: most funds are inaccessible to small investors. Currency risk: investments in local currencies may lose value. Manager risk: not all fund managers perform well. African private equity and venture capital offer attractive returns, often 15 to 25% IRR for top quartile funds. However, access is limited. Most individual investors can't invest directly. The best alternatives are 1. Buying shares of companies that operate in high-growth African sectors, or 2. Using ETFs that track African markets. If you are accredited, consider a fund of funds or an impact platform. Would you invest in an African private equity fund if you had the opportunity? What sector interests you most? Let me know in the comments. Don't forget to subscribe for more insights on African markets. Thanks for watching.